What's up, everyone? In this video, we're going to be going over whether or not this might be the bottom of this crazy stock market. So we can see today that stocks, for the most part, are deep in the green. There's a lot of buying pressure today, which is very relieving to see. We're seeing some of these growth plays like Roblox, Beyond Meat, Asana, DraftKings, and many more booming to the upside. And we're even seeing these powerhouse companies like Tesla and Apple also popping up. So the stock market, as we all know, has been terrible over the past year. But here is some good news. For the most part, we should be in for a couple weeks of peace, you can say, because a lot of the major events are behind us. For example, for the most part, all of the important earnings are gone for a couple weeks or a couple months. We're basically at the end of earnings season. So that should definitely tone down a lot of the volatility. On top of that, there aren't any crazy new economic reports or new data that will be released over the next couple weeks. We have the FOMC minutes in a couple weeks on Wednesday, May 25th. Besides that, we have a couple, somewhat important data points, but nothing extremely crazy, you can say. So that's really good. On top of that, the next FOMC meeting isn't until June 15th. So it's like we have time and the market doesn't really have anything too crazy going on. At the same time, stocks sold off in an extremely quick and significant way over the past couple weeks. And even if we go back throughout history, even in the most severe stock market crashes, a lot of times those significant drops are followed by significant pops back up. And that does not mean that the stock market is magically going to return back to all-time highs. Not at all. But I really wouldn't be surprised if we do see, some short-term pops back up. Even in the COVID crash, we can see while there was a giant drop, there were some really nice pops along the way. And even in the beginning of this year, we had a giant drop from, the start of the year to January 24th. But we saw a pretty nice pop up after that for some time. And even we saw an amazing uptrend from March 15th all the way up to March 29th. Now, we had a giant drop, but we are yet to see a true, significant pop back up. So in the short term, I'm definitely expecting some positive momentum. We are also back above that $400 support level on the SPY, which is great. And it's also really awesome to see, some of these powerhouse companies like Apple, Microsoft, Tesla, and Google leading the way back up because they've been brutal over the past year. And I know growth stocks specifically got hit the hardest, like Roblox, DraftKings, Zoom, Matterport, and many other ones. But even these powerhouse companies like Facebook and Tesla and all them are down quite a bit. And normally when you see those types of moves, you almost always see some sort of pop back up, at least in the short term. Now, here's the thing. Nobody knows with 100% certainty if we're going to see a recession, if the stock market is at the bottom, or what's going to happen. No one knows with 100% certainty, not even Warren Buffett, Jerome Powell, no one knows. But what we do know with 100% certainty is that historically speaking, the best way to navigate the market overall, especially in times of extreme volatility, is buying up stocks that are, solid companies and just holding. That's what we do know for a complete fact. So if you're looking at the market right now and you're scared or, you're whatever, if it's been hurting a lot lately, understand that the stock market is very irrational. Sometimes in a good way, sometimes in a bad way. But these events are what ultimately end up giving you the best opportunities out there. If the stock market was perfectly priced all the time and there were never any mistakes or overreactions, then there'd be no point of watching the stock market every day, because then there would be really no true opportunity, because at that point you might as well just buy and hold the S&P 500 and, hold for as long as you want. But these crazy events are what end up providing the opportunity. So even if you buy a little bit too early, if you just slowly buy in over time, historically speaking, you will do very well. Of course, as long as you're buying good companies, okay? Now, I know I talk about this quite a bit, but I just want to show it again because it's so important. This study basically looked from the beginning of 2007 to the end of 2021. If you would have put 10 grand into the S&P 500 from the beginning of 2007 to the end of 2021, that 10 grand would have turned into over 45 grand. If you would have only missed the 20 best days, instead of having 45 grand, you'd only have 12 grand. So I'll zoom in on this a little bit more so you guys can see it. It goes to show you that if you see good companies out there, historically, we know for a fact that the best thing to do is buy, dollar cost average, and just hold. Let the market, wake back up, and you should do pretty well over the long term. Now, I also want to point this out when it comes to like short-term trading. There will come a point where it's no longer worth it for short sellers to short their stocks. For example, Roblox, it's a growing company, growing industry, blah, 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 right? They're growing a lot, the revenue's booming, there's a lot of hype with it. It may have made sense to short Roblox shares at $140 or $110 or $100 or $80 or whatever, any price like that, because the valuation was very aggressive. But not only for Roblox, but many of these other growth stocks, there comes a point where it's no longer worth the short, and we will see shorts cover, and they will end up making these stocks pop back up. So for example, if a hedge fund shorted Roblox at $125 a share, and now it's at $30 a share, these hedge funds really have to reevaluate their position and say, is it worth still holding this short position? And a lot of times, the lower the stock goes, the answer will be closer and closer to, no, it's not worth holding anymore. Let's take profits and, let's bring our money elsewhere because of one, opportunity cost, but also just, a lot of these stocks, like, yes, these growth plays were definitely overvalued. Many of them were, but they're getting to some pretty good valuations now. So, long story short, while the stock market has been brutal this year, while there's been a lot of panic selling and crazy volatility, these are the times when opportunities are the greatest, right? I know while everyone loves to buy in when stocks are high and then sell when they're falling, most people, you shouldn't be doing that, like Warren Buffett says, be greedy when others are fearful and fearful when others are greedy. And I'm definitely seeing a lot of fear in the market right now. So I'm just going to continue to slowly buy in over time. And historically, it's a pretty smart move to make. But overall, understand that for the short term, it's looking nice for a short-term pop back up. It's awesome to see all this green in the market, especially out of the powerhouse companies like Microsoft, Apple, Tesla, Google, stuff like that. They will definitely lead the market higher. I just want to recap, we don't have too many crazy events coming up, so that is good. Keep in mind, in terms of like stock market performance, we do have the midterms coming up soon too, and I know that falling stock prices aren't the best, for intended elections, you can say. So, maybe we'll see some Powell pump, or maybe Biden will try and pump the market. Who knows? Overall, though, this market's crazy. Take advantage of these crazy irrational price swings, and shares would be ideal. Options are very expensive right now. Keep that in mind. Overall, be expected for volatility, and I hope you guys have a great weekend. Thank you guys so much for watching.